Hey everyone, welcome to your daily update for SOL, Bitcoin, market cap, crypto, etc., etc. So let's start with liquidity. So one day has taken an absolute punish to the downside. They've gone down and swiped pretty much all of those very over leveraged longs, both on BTC and on SOL. So to the upside, if they were to bounce, there is shorts building up to about 202 and then sort of up to about that 213 area in a couple of clusters. If they want to keep going down, they're sort of going to run out of one-day liquidity by the time they get to about 182. And that has a bit of confluence with something we'll see when we have a look at the one-day charts. For Bitcoin, that would be very much the same as dropping down to about 115 if they went down to the bottom. And they could easily shoot back up again and sort of take that cluster through to 121 or maybe even higher, 125. So there's still quite a bit of liquidity on the board to be taken on the one day, but most of it's starting to shift to the upside. So if we have a look at 7-day, sentiment for 7-day is still basically mixed, just as many shorts as there are longs. If you wanted to wipe them out on Bitcoin, you'd sort of be taking all the leverage down to about 114. And it's not, I mean, there's a really big cluster, even quite visible on the 7-day, that goes to that 115 level. And that's where there is a bit of confluence with some potential bounces to come. If they wanted to go to the upside, it's still really just those low to mid 120s. As for SOL, SOL's got quite an obvious cluster up to 203, and then again, same sort of thing up to 213 for that next cluster. For the downside, definitely 170s would be, if it took everything down to the 180s, then down to 170s is that next cluster down to that 169 area. They wanted to clear the 7-day. And if we go to the 30-day, the 30-day numbers are still showing down to about 110. No real reason to go above 125 as far as Bitcoin goes. And on SOL, they're showing up to sort of 213, 214, and right down to that 153 area, which is that weekly area that we've been sitting here looking at for a while. So see how that plays. Give you a bit of an idea about what's just gone on. As you can see, looking at that liquidity, it's starting to build up again around this price point on SOL. So if we start building liquidity at these levels, both top and bottom, then that sort of means that they're just trying to shift the price down. They haven't really bounced back from this area as fast as what you would want to see if this was a real bullish flush. It sort of says to me it's sideways, they're pausing, and then they're probably going to take another swipe down. Bitcoin, they haven't really hit. There's some 50x leverage starting to form below price. There's a lot of 25x trades that they haven't actually taken yet. They really did a hack job on SOL more so than they did Bitcoin. But as you can see, ginormous pile of 25x trades just waiting to get liquidated down to that 115 level. But people are starting to open DGen shorts. So you've got 100x leverage positions that they could take if they went back to the low 120s or even to the mid 120s. So yeah, Bitcoin definitely looks like people are starting to DGen short, which might give them a reason to do a bit of a spike and then a dump, but just keep an eye on that, I guess. Let's have a look at the charts. So yesterday and today, so closing today, we only have a 1-day and a 2-day close and a 113-day, which we will look at, but it's very similar to the type of thing that happens when you get a prime day. There's not a lot of structural change today, so they can go a bit crazy with things like liquidations, like what you've just seen. Tomorrow is a prime. Excuse me. I really should learn how to edit these things out. Tomorrow is a prime day, so we only have a 1-day close tomorrow, so I would say that we can definitely see more chaos. And so looking at the 1-day for SOL Bitcoin Strength, it actually looks pretty good. We've bounced off the break level here after retesting it. We haven't managed to hold the break level to the upside. So we haven't really captured the 1.6 levels properly. Next candle could be just more continuation down to the sort of 153 area. But structurally, the strength is not looking that bad. It sort of says that they might want to give a bit more of a punish to Bitcoin, but I think they've potentially already given that punish or a lot of that punish to SOL. We look at our safety assets. So Bitcoin, USDT, basically all the stables. We're bouncing off that support trend, which is what we sort of predicted would happen yesterday. So heading back from 65.14, we should probably head back up to retest something around 66.4. If we do that retest and then reject, then we move back into bullishness for alts. But as it currently stands, you're probably going to see that a little bit more pain. That totals. So our total has come down into a hold level. We should probably put a fib on that and see how that plays. And yeah, we had our bounce. So we hit the hold level, we had our bounce, we've rejected off the backside of the trend, and we're moving back down again. So there's not, next level for this is probably going to be around 355. So that also would imply that maybe 356 for the break level and the trend, something around that area, 355, 356. So that's pretty confluent with them wanting to push prices down a little bit further across the board. Okay, 1 day on SOL. So it's 2 hours roughly till close. We have a hold level at 182.598, and I'll probably be looking to take some form of scalp into that level. The trend is quite far up as far as where that scalp could go, so it might head all the way back up to the 204 area at an absolute high, or it could reject off the 191. So if we think back to where our clusters of leverage are, we had that leverage up to about that 202 area, and of course by the time you get to 202 there will be more leverage in there because people will want to short the pump. You've also got sort of that trend coming through which we haven't hard closed, so that's about 198. You've got an origin level which we haven't hard closed, that's 200. So taking something on this this close down here, where are we? So 182.6 or below. Preferably you'd want to see it bounce the trend just to be absolutely sure. But something down in that level should get us a bit of a run up to minimum of a hold test on the other side, which is about 191.7. So I'll be looking to take that trade, I think, today. It seems that might be that little quick reversal that they do to take out the leveraged shorts that have come in too late. But I don't think we're going to survive stopping there. I think it does look like this is, particularly when we look at some of the really high time frames, looks like we're probably going to have a bit more downside to that. But if you enter on one of these and you take some profits when it hits that sort of 190 area, and then you just set yourself a stop loss, either a break even or at entry, you never know, you might have got the bottom if suddenly everything magically flips bullish and the wars end and all that kind of stuff. Else you just get stopped out and you've made some money anyway. So we're looking at that for the 1 day. 2 day. So 2 days showing a bit more positivity really, because it has hard closed over this origin level here at 174. It has bounced off that. It's gone all the way up. It's tested that next origin level there at 196. It's spiked through that, but it hasn't managed to hard close that. So this definitely looks like it should be rejecting back to trend. But if it stays above the downtrend, which is about 185, then we might dive that and then travel back up from there. So it's the one thing I would just, and I've marked out some of these higher time frames just on here. The one thing I am not trusting about this current downwards move is that sitting up here, we have things like a 16-day hold at about 210.990. We have another 2-day hold at 212.890. We have a 3-week hold, which is quite a big time frame for resistance, and we have that up here at 213.273. So we rejected off the 208.990 level, wicked up slightly above it, hit that sort of 210 area, and we've been coming down since then. So the real question is, why did they not touch these higher levels? They're targets for one area or for some time frames, they're rejections for others. I just can't help but wonder if over the weekend we're going to get, another bullish pump and then a bigger rejection. It's it's never confidence inspiring when they do not hit all of these. If the market was really wanting to flip bullish, what it does is it's kind of the old saying of, to kill two birds with one stone. You might as well just hit all of these resistance levels in one go, have a nice solid dump, and then go, and then go up with all of the stuff already done. So yeah, there is definitely some big stuff sitting up there. It seems like they don't want this to really just come out of it straight away, but the other scenario I see is that they're not terribly worried about this big stuff, because if they are just going to go to a blow off top, they'll just power through it, keep going, and then it could be 6 weeks from now or more that they actually retrace to all of these obligations, and that would just be market cycles really. So here's the 113-day close. What a doozy. Now these high time frames are really hard to chart, just simply because this candle down here, which is the 6th of December, it is not a 113-day candle. This one is. Somehow the real trend is probably between these two. So I've drawn both of these trends on. There is a scary little amount of respect that was given to that trend, like it actually stopped there. So that's kind of, there were other reasons why that stopped there. It had confluence with other daily levels, etc. But when you start to see confluence between high time frame trends and low time frame levels, that allows for just that little feeling of bullishness. The other thing is that if we close over this 189.27 level today, that's a genuine hold level, because that is the 1st of January candle, that is the 24th of April candle. So these are both equal time frames, and if we do close over 189.270 today, that is a targetable candle. It has a 247 target. That number keeps coming up. So yeah, very interesting market right now. You've got Bitcoin, which is showing that it really wants to do a big flush and knock out the rest of the leverage. It looks like it wants to retest some of those lower levels. And you've got SOL that is acting in a way that it's almost been secretly bullish, whilst looking like it just wants to give you hope and then wreck you. So very interesting market. And that's just an idea of that 3-week level, just to give you a bit of an idea of some of the stuff I'm watching. So you've got this 213.273 level up here. You've got your 3-week trend that we've rejected off here. The logical support, and this has got 10 days to go on it, so a lot can happen in 10 days, but the logical thing, if this is to continue retracing, is to go down and retest this 3-week range trend through here as a minimum sort of support level, and that's about 156. If it goes all the way to these range trends and interior trends down here, that's down in the 140s. So when you look at that 30-day liquidity, it is still realistic that we could see those levels, which is why you've got to be a little bit careful. But if it doesn't touch this 213 and it does retrace to this range trend around 156, then what happens is the situation reverses, because when you create structure or structural moves on a time frame, it's all about where the candle closes, and it's all about where your triggers are, and they have a path. So if we hit 213 today, let's say we hit it today, our structural path is all the way back to retest this trend down here. If we close over 202 in 10 days time, and then we hit 213, well, then our structural path could be just to retest the backside of the trend at 198, or it could be to retest the break level at 187. So it's all to do with the timing in which these things close and what side have they actually touched as to where they are going. So this time frame is literally in the middle, and it's kind of waiting for that close, and then where it closes, what it touches next, determines where it goes after that. So overall, I think it's actually pretty bullish that we haven't hit that 213 level, because it means if we do get a close down here, then we can just jump up to it. So not so bad. BTC. So let's run through what we did. So here was our trend, which went to here, which went to here. Why learning trends is so important. Went to here. And yesterday, we closed this candle, in which case our trend flipped from being under, which is a support trend, to being above, which is a resistance trend. Now we spiked up into that trend, and then we start to come down. So what do we have down here? Well, at 117.5, we had an untested break level. It had been hard closed on the 12th of August by that candle there. This whole candle was used to propel the price up, so that whole candle was done. It was not going to hold the price again. And sitting down here was effectively our little trap. Once we rejected off the trend, once it was relocated to the top side, rejected, it was coming back down here. So that was the dump. And if you tie the sentiment into that, and some of the comments I was seeing on X yesterday were just people going, you're going to have 3 months of nothing but up, don't screw this up, like all that kind of stuff. It was just berserk euphoria, and at the same time we're flipping a trend into resistance and we're dumping. So I guess it's sort of, if you tie all that stuff together, just got to be pretty skeptical when you hear these people talking about moonshots at any given moment. Long term, yes, I think there's still more upside. Short term, and that's what leverage trading is, short term, you just got to be real careful with this stuff. So we have got, I'll just draw this in, a little bit of material there. So we have dived the trend, we've hit the break level. We have this hold level here at 116.6 K on BTC, and there is some hold levels sort of down in here as well at about 115. Those sort of roughly line up with our range trends, which are down here. So what do we got? Our range trend on the daily is currently at about 114.5. Tomorrow it's about 114.7. So then as the day goes on, that becomes a higher number based on the upwards direction. So we've got a bit of confluence to dive down to there. We've certainly got liquidity clusters down there. They just need to get enough people longing that it makes it worth pushing through it in between. Backside bounces from ranges, which is what we've just break level to be retested, which is here at sort of 117. These do not always hold, and then your front side to that is around that 116K level. Now, we could open the next candle and just put this on there. That's a break level at 118.143. So if we open this candle below that break level, we could basically reject off the backside of that 118 and then keep the movement down. If we can close up inside that break level, then we'll probably bounce off that break level and head back up to one of these hold levels, maybe 119 through to 120s. We might even head back to one of these trends, 120 to 121, and that would wipe out that late leverage that's coming in now. So really, you're looking to see whether we close above 118.143 or below it, because one of those things is going to be outside of the range and one of them is going to be back inside the range. That's your daily. 2-day. So 2-day is creating a hold level here at 119.239. Now, let's see, do we have, let's get rid of that trend because that's gone. Let's see whether we have any, don't really have any interior trends, that's gone. We've sort of got a range trend through there. Okay, so that's holding it at the moment. So this time frame has a level with confluence of our external trend and also quite a nice channel. It's very, very nice sort of channel on the 2-day. But the hold level is at 115.003, and that hold level has confluence with our exterior trend. If we were to close just slightly under this range trend, so where would we have to be? Say a 117.5 close. If we close around there, we will probably reject off the underside of that trend and come down. Now, the other thing is that we're creating a hold level anyway. So we're creating this 119.239 level. Even if we close above this range trend, we could come up, hit that hold level, and then that rejects us down through the trend to actually hit this hold level, which has confluence with this trend. So some form of move that could be as far to the downside as about 115k, and sort of as far to the upside as maybe the low to mid 120s. Something will probably happen in there, on the next sort of based on the 2-day time frame, and it will have some form of attachable narrative. I'm sure there'll be news, war, something, whatever. But just be prepared for that. If it comes down first, it's probably going to bounce back up, in which case it's a good option for a long. If it goes up, wait for it to roll over at the trend, wait for the liquidity to get replaced. And that's probably one of the key things, is that the liquidity that they wipe out on the way up, which is in the form of shorts, will need to be replaced by people taking out longs. So I don't think it's unlikely it will just shoot up and then shoot down, because that's not a very efficient way of moving price around. You want the escalation of people's liquidations and stop losses to assist with moving the price. So like you saw yesterday, they go up, they stay there for a long time, everyone's really bullish, people are opening longs, and then they roll over and dump once they can use your stop losses and your liquidations to move price. So that's where that is. I haven't actually looked at the 113-day on coin, but just for giggles, let's do it very quickly. Probably not too much to read into that. Jan, August, 6th of December. So you do have a trend through here. 102. Let's hope they don't go down and retest that trend, but they might. And you've got a hold level down here at 66, but once again, hopefully that's just going to be a bear market level. If not, you heard it here first. Eek. We've got one of those two is the correct trend, and that's not actually a real candle. Very hard to tell on some of this stuff where things actually lie, but it's probably that. So that's got a backside up there in the 130s, 102. That is actually sort of a hold level fractally. There, it's 98. That'll be the backside of something at 108. See how that looks on a daily. Yeah, 108 to bounce up to 237 or higher. Yeah, these are, just keep in mind, everyone, that one of these really high time frame moves, one of these really high time frame eventual rejections, which are really hard to get precise numbers on, but one of these is going to be the end of the bull market, in my opinion. I'd love to be wrong, but it's every time they say this time's different, and every time it isn't. So see how it goes. But for now, keep an eye on even these levels. If you see immense volume suddenly appearing at a level like 108, then yeah, you probably are going to see 130 something over a period of time, given that this is a 13-day candle. And if it plays out like every other backside frontside move that's ever existed, once it rejects off that, it'll be back down here at 98. And if it does that over a period of time and it builds some resistance, well, in fact, actually, if it rejects down to there, it'll be back under trend, in which case you might find that you reject off that and then you come down here to 66 and we start our cycle again. So we'll see. But yeah, hopefully you got something out of that, and you might get some ideas about which sort of ranges to be trading today. And yeah, like and subscribe, and catch you all again. Cheers. Bye.